Welcome to the Crypto Prism channel. Let's take a look at the latest price action of Bitcoin. Now let's switch to the 4-hour chart. Bitcoin dropped to around 86,000 at its lowest point, clearly breaking below the previous low of 87,200. Structurally, this has formed a lower low. This move essentially that the previous upward structure has been completely invalidated. Looking at the price action, for those who haven't subscribed yet, feel free to follow the channel. After breaking below the original ascending trendline, price moved into an accelerated decline. There was no rebound after losing 87,200, which perfectly validated the earlier judgment. Once a trendline is lost, the market tends to use speed to search for lower support levels below. And that is exactly what the current market is doing. Let's zoom out further to the daily chart. On the daily time frame, this wave of decline has once again approached the 0.786 golden retracement area around 85,400. It needs to be emphasized that 0.786 is not an ordinary retracement level, but rather the final line of defense between bulls and bears within a trend. If price fails to stabilize effectively in this region, it often means that the previous upward structure has entered a phase of deep correction, or even a trend reversal. At the same time, the current daily candle is printing a high-volume, long-bodied bearish candle. The real body is large, the lower shadow is short, and volume is expanding simultaneously. This is not a hesitant decline, but rather the result of active capital outflows. It shows that bears have taken control on the daily time frame. Now let's look at the 1-hour chart. On the 1-hour time frame, this decline is a typical high-volume sell-off, not a low-volume grinding drop. A high-volume decline means that there is real transaction activity supporting the move lower. Selling pressure is continuous and effective. This type of drop is usually not just emotional liquidation, but a structural breakdown followed by momentum release. Therefore, in the short term, the market's tolerance for rebounds will significantly decrease. Rebounds are more likely to be treated as opportunities to reduce positions or initiate short trades. Finally, let's return to the weekly chart. The weekly candle is about to close, and in terms of structure, it is highly likely to close as a long-bodied bearish candle. When combined with last week's candle, it essentially forms a bearish engulfing pattern. A bearish engulfing pattern on the weekly time frame represents a mid-term trend weakening signal, and its weight is far greater than short-term fluctuations. Once confirmed, it often means that the market will enter a phase dominated by choppy but bearish biased price action with limited upside and rebounds. Combining what we just discussed, the structural breakdown on the 4-hour chart, the deep retracement and bearish daily candle on the daily chart, the high-volume decline on the 1-hour chart, and the confirmed bearish engulfing pattern on the weekly chart, it is clear that the current market is not just experiencing a normal pullback. Rather, it is a multi-time frame resonance of trend weakening. In this environment, any rebound without structural confirmation must be treated with high caution. The real key is not to guess the bottom, but to wait for the market to provide a new stable structural signal before discussing a renewed directional choice. Alright, that concludes today's analysis of Bitcoin. See you tomorrow.